Good morning, good morning, good morning. It is me, Kenny Polcari, your host of the party, and look where I am today. I am back in Florida finally after a couple of days trying to get back here from New York. Canceled flights, delayed flights, it was school vacation. Oh my God. Anyway, it is an absolutely spectacular day here. Look at that sky behind me. It is clear blue. The water is like ice. There's not a shred of wind. There's nothing that suggests a storm ahead. So what is it? Today is Wednesday, February 22nd, 2023. And here's what you need to know, right? Yesterday it wasn't so calm though, right? The tone was negative. Monetary policy and geopolitical issues causing all kinds of unrest. Sellers running for the exits as buyers just stepped aside, sending stocks lower yesterday, right? The dollar index goes up on the back of the higher interest rate discussion, and commodities come under pressure. The 10-year bond is now kissing 4%, and that appears to be the line in the sand. And Vlad tests a nuclear-capable missile while Gigi makes his plans for Taiwan. And what do we have for dinner tonight? We're going to have the spaghetti alla Nerano. We'll talk about that in a moment. It is so good. Hello, is anyone home? Guess what? Investors are finally waking up to the narrative that interest rates are going up, and when they get to that terminal rate, otherwise known as the neutral rate, they will be held there for longer. It was a risk-off day as traders and algos ran for the door, increasing the supply of stock while savvy investors stepped aside, forcing the sellers into panic-like sales as inline demand dried up. Now remember, it's not that there was no demand. There's plenty of demand. There just isn't plenty of demand in line. But down 1% or 2%, there are more than enough bids. Then we had disappointing earnings projections coming from two of America's biggest stalwarts, Walmart and Home Depot, and that didn't help the tone. And so stocks fell. Every seller meeting a buyer at lower and lower prices. The Dow falling 700 points or 2%. The S&P down 82 points at 2%. The Nasdaq lost nearly 300 points at 2.5%. The Russell gave up 60 points or 3%. And the transports gave back 490 points or better than 3.25%. Bond prices continue to fall as well, sending yields higher. The 10-year now kissing 4%, and that appears to be the line in the sand, at least for now. Remember, the 6-month and the 1-year T-bills are already yielding more than 5%, while the 2 years pushing up against 4.7%. Now, while treasuries do represent the safety trade, they still are not protecting you against the ravages of 6% inflation, and that's the number, at least, that they tell you it is, right? 6%. But for those of us that go to the supermarket or go out to dinner or pay the bills or try to get away, we realize that inflation is still running at a healthy clip. That is somewhat, maybe more than 6%, capiche? And remember, 30-year rates, think mortgages, are priced off of the 10-year treasury bill. So this as a treasury bond. So this, as yields move up on the 10-year, then expect mortgages to get more expensive, and that will show up in weaker housing data that we're going to see in the days and the weeks ahead. And talk of rising rates sent the dollar index higher, right? The DXY to end the day at 104.17, and this morning it is up again, trading at 104.23. And you know what that means? Pressure on the commodity complex. Gold fell $6 yesterday to end the day at $18.44 an ounce, leaving it in that 1800, 1880 trading range, right? Now, with the rising dollar, 1800 is the key level to watch. Will it hold or will it breach that support and move lower? Well, that all depends on the inflation and interest rate narrative, right? If it stays hot, then gold could break the 1800 level. But if it cools, unlikely for now, we could see gold stabilizing here. It just depends on what the narrative becomes. Oil also came under pressure, falling 13 cents to end the day at 76.20, but not before falling to a low of 75.97, just kind of testing it. Now look, it was the rising dollar, but it was also that slowing global economy, that shorted demand, destroyed demand story. See how they do that, right? Recall that last week we saw a build in U.S. inventories suggesting slowing U.S. demand, yet we saw rising demand coming out of Asia. So it was a yin-yang kind of narrative. So what did they do yesterday? They repeated the negative part of the U.S. inventory build story because that fit right into the broader negative total story that we felt yesterday, right? And this morning, oil's lower again. It's trading at 75.40, down about $1 in what appears to be more technical weakness, right, on a stronger dollar as oil attempts to find a bottom. But look, don't worry. Expect to hear from the Saudis any day now. Remember that when oil starts to trade sub $75 a barrel, the Saudis stand up and start making all kinds of noise about production cuts, while Vlad has already promised to slash production by 500,000 barrels per day. So don't expect oil to fall very far from here. And don't forget, Joey's posted this big flashing neon billboard announcing that he is a buyer at $72, right, and lower. Remember, he's got to buy millions of barrels of oil just to refill the Strategic Petroleum Reserve, which means there's now a floor in oil. All right, so don't expect it really to fall out of bed. Not happening. Now, adding to all this excitement, don't forget, is that we had the weekend warnings, right, from all the big banks. Morgan's Mikey Wilson telling us that traders and algos have taken stocks to unsustainable levels, defining it as the death zone, and that did not help the tone. And then this negative tone was amplified by comments by both JP Morgan and Goldman Sachs. JP Morgan warning us not to count the recession out, with more commentary this morning, so we'll get to that in a minute, while Goldman told us that they expect 3 more moves of 25 basis points before the Fed pauses, to which I would say thank you, Goldman, for your clever insight and incredible insight into Fed policy, but you're late to the game, right, with that call for sure. Everyone on the street has been calling for 3 more rate hikes for weeks now as the macro data revealed that the inflation monster just won't quit, with last week's CPI and the PPI data only solidifying it for those of us who had the foresight to predict it and to call it. That's a whole nother story. And then there's all the geopolitical drama that's starting to boil on the back burner, right? This Friday is the 1-year anniversary of the Russian invasion of Ukraine, right? The fighting has no end in sight. Vlad raising the temperature in the region by unsuccessfully testing a nuclear-capable missile, all while Joey was having tea with Zelensky in Kiev, right? Committing another $500 million of support, only adding to the angst. In addition, during his State of the Union address, Vlad's State of the Union address, over the weekend, he blamed NATO and the West for this confrontation, saying it was his duty to stop it. We also found out that Vlad suspended participation in the U.S.-Russian nuclear arms limitation treaty, suggesting that he's preparing for a new arms race. Now, much of this is just noise, but when the markets are anxious, this noise only adds to the echo chamber all around us, right? Kind of resonating off the walls, causing more angst for the markets and for investors. And not to be outdone, U.S. Secretary of State Tony Blinken said that China is considering supplying weapons to Russia to assist in the war, something that China was quick to deny, accusing Tony of spreading lies, all while Joey warned China to stay out of this fight. Yeah, let's see how that works, right? Joey telling China to stay out of this fight. Well, we're about to find out, right? Because China is watching this whole story intently as Xi plots his next move to take over Taiwan. When? No exact date yet, but by all accounts, he's set to do it while Jojo is still in the White House. So that's anytime between now and January 20th, 2025, knowing full well that Jojo has his hands full at the moment and would be pressed to get dragged into another confrontation. Never mind, Jojo trying to process it all, right? What's happening all around the world. That's a lot to process. All while East Palestine, Ohio, in the United States burns to the ground, poisoning its residents without a word or a visit from anybody in the administration. Transportation Secretary Mayor Pete, who is apparently going through his South Bend, Indiana disaster playbook, is trying to figure out what to do or say. Now, to be sure, Petey told GMA, right, Good Morning America, that he's dealt with plenty of disasters while he was mayor of South Bend, and that he would visit East Palestine when the time was right. I'm just curious, when is that time right? It's been 2 weeks already, and nothing out of Transportation Secretary Pete. In any event, it is getting hotter around the world, and we are not talking about climate change. Every sector was lower yesterday, and it was as expected. Again, it was this year's outperformers that were the biggest losers, right? So consumer discretionary down 3.3%, tech down 2.4%, communications down 2.2%, housing down 4%, real estate down 2%, retailers were down 5%, disruptive tech down more than 6%, airlines down 3%, semis down 3%, artificial intelligence down 3%, and the list goes on. But you know what was up? All those contra trades, right? The PSQ up 2.4%, the dog was up 2%, and the SH was up 1.9%. And the VIXI, that was up a whopping 7.6%. And what else was up? Aerospace and defense names like Lockheed Martin up 0.7%, and Northrop up 0.7%. Does that make sense to you? The market's getting crushed, but investors are buying up defense names, not defensive names. Hello, Taiwan, anybody home? Just saying. This morning, U.S. futures are limping higher, right? Dow futures really flat in the day, up about 15 points. S&P's up 5. The Nasdaq's ahead by about 15 points, and the Russell's up 1. J.P. Morgan's Marko Kolanovic calling for another 5% move lower before we see a bounce. Funny. I said that yesterday morning, right, in my statement. He must have read my note from yesterday, but my point was, are prices out of whack? Just a bit, yep. Is it anxious? Yep. But is it about to collapse? I don't think so. I think S&P 4000, which was down 2% coming into yesterday morning, will be the place that gets tested this week. And if it holds, then that's a positive. And we tested it yesterday. But if it fails, then I suspect we will test the December lows of 3750, 3800, which represents a 7% decline from where we were yesterday morning. And remember, a 7% move up or down is within the normal band of trading, especially when the landscape is as anxious as it is right now. And that's what I said yesterday morning. So two things happened. Yes, we tested S&P 4000. We closed there yesterday, and we held, at least for now, which that was a 2% decline. Another 5% puts us where? Oh, right, 3,800. Hello, what did I tell you? Okay, anyway. Eco data today is about mortgage apps, which last week they fell by 7.7%. What will they show us this week? And at 2 p.m. we're going to get the FOMC minutes. I don't expect to learn anything new, but do expect some journalists and analysts to just tear it apart sentence by sentence, looking for that golden egg statement that everyone missed during the press conference on the 1st of February. I say it's ridiculous. Open your eyes. It's very clear where we're going, right? You can see it, you can feel it, you can understand it. Just open your eyes. European markets are all lower this morning across the board. The FTSE down 1%, the CAC 40 down 0.7, Germany's down 0.6, Eurostock is down 0.6, Spain is down 1.2%, while Italy is lower by 0.9%. The UK government reports a surprise budget surplus in January, which did nothing for the tone that is overwhelmed really by the geopolitical narrative, right? Russia, China, Ukraine, what's going on, who's supporting it, what's NATO doing, what's NATO not doing. The S&P yesterday lost 81 points to end the day at 3997. Remember what I said, S&P 4000 was the key level and is the key level to watch. The S&P pierced it on the upside on March 29th and has pushed higher since. And then on February 2nd, we had that golden cross that I told you about. And that is when the short-term trend line crosses up and through the longer-term trend line, which is a technically bullish signal, right? That would suggest higher prices, which we saw. Which is why I say the S&P 4000 is that key level on the way down, because it's building support there. Futures this morning are trying to push higher, but this is a critical juncture, right? It's not a reason to panic. I think that Mikey Wilson is wrong about where stocks are going. I mean, they might be going lower in the next week or so, but are they going to down 26%? I don't think so. I don't think it's going to be the hurricane that he is suggesting. I hope I'm wrong. I mean, I hope I'm right and he's wrong, but we'll see. In the end, stick to the plan. Someone asked me on Twitter yesterday if I was selling stocks here to buy them back at cheaper prices later, and my response was no. I'm buying downside protection that will increase in value as stocks fall, right? Think those contra trades. And I'm going to put new money to work in my favorite names that are being arbitrarily dislocated because of the negative narrative, not because of any fundamental change. I'm sticking to the plan because I do think that stocks will be higher at year end and will outperform in the long term. Okay, so what do we have for dinner tonight? We're going to have the spaghetti alla Nerano. Right now, Nerano is on the Amalfi Coast. It is one of the most beautiful places in the whole world. And this recipe comes from the small town located along the cliffs overlooking the Mediterranean, right? So I hope you enjoy it. It's simple to make. It is so delicious. So here we go. For this, you're going to need like 4 green zucchini, nice size, right? If they're smaller, then buy 5 of them. You need a pound of spaghetti. You need fresh grated provolone cheese. You need 2 garlic cloves. You need some basil leaves. You need extra virgin olive oil, salt and pepper, and some butter. And you need Parmigiana cheese if you want, right? Begin by bringing a pot of salted water to a rolling boil. Set it up on the back burner so that it's ready when you need it. Grate the provolone and then set that aside. Now, slice the zucchini into thin discs. Not thin, but, not thick. right? Then you want to fry the discs in the olive oil until they're golden on both sides. Then drain them on a paper towel. So put a paper towel down on a plate and then put the discs on the paper towel so it'll drain. Sprinkle it then with salt and pepper and just a little bit of the provolone cheese. Repeat until you've fried all the zucchini. Now the cheese is going to melt into the zucchini, right? Add the spaghetti to the boiling salted water. Cook it for about 8 minutes or just under, just so it's al dente, right? Because you're going to continue cooking it in the pan. Now, while that's happening, you want to saute the garlic cloves, slightly crushed, not chopped or minced, just crushed in the pan that you use to fry the zucchini. Adding a bit more olive oil if you need to. Remove the garlic once that it's brown. Now you're going to add half the zucchini and the spaghetti directly from the pot using tongs. Now add 1 ladle of the pasta water, 1 tablespoon of butter, and a handful of the grated provolone cheese. Finish cooking this over low heat, adding another ladle of the pasta water gradually along with more of the provolone cheese because you want to make this into a creamy sauce. You want to serve this immediately using the remaining zucchini to top off the dish. Enjoy this with a nice chilled white wine. You know me, my favorite Pinot Grigio Santa Margherita. You can never go wrong with the Pinot Grigio Santa Margherita. And as long as it's nice and chilled, it's a beautiful complement to this dish. Look, the day is just getting started. It's going to be another spectacular day here in South Florida. Let's hope the markets kind of calm down a little bit. Until tomorrow, take good care.